معرفة.
Bismillah ar-Rahman ar-Rahim. Now let us discuss about total debt in relation to the total assets or average market cap. Okay, let us take an example again to understand this better. So if there is a company and this company has entered into a debt arrangement wherein this company has taken a loan of, for example, $10 million on interest. So this is a conventional loan based on interest which this company has taken. Now the question is, if there's an Islamic fund, can the Islamic fund invest in such a company which has on its balance sheet a loan of $10 million? How this is viewed from Sharia perspective is that in such a scenario, first and foremost, in today's investment market, when we invest in a company, we buy a share, be it a listed company or be it a non-listed company. But generally, Islamic funds, to a greater extent, what we have seen in terms of market practice is that they buy listed equities. So for example, in this case, if the equities of this company are listed, and we understand that when we buy an equity of the company, we become a shareholder, and by becoming a shareholder, we also become an owner in the assets of the company. The answer to the question whether the Islamic fund can invest in such a company which has a debt of 10 million is, first and foremost, if we are using average market cap. The answer to the question whether an Islamic fund can invest in a company which has a loan of $10 million, a conventional loan where the company on a regular basis is paying interest on such a loan, is allowed or not, is that we have to see what is the average market cap of this company. Now, to see what is an average market cap, we have to understand what is market cap. What is market capitalization? Generally, market capitalization is nothing but the value of the share multiplied by the total outstanding number of the shares. So for example, if the value of one share of this company is, for example, one share of this company is equal to $30, right? And the outstanding share in the market as of today are, for example, 1 million. So the total market cap of this company will be $30 into 1 million, which is nothing but 30 million, right? Now the question is, for example, just for ease of understanding, let us understand that even the average market cap, meaning to say, why they take an average market cap is because, as we know, that the share prices on a regular basis fluctuates. So it is always better, if we are taking the market capitalization as a benchmark to screen, then it is always better to take the average market cap. So generally, currently, some of the major indices are using either 24-month or 36-month trailing average market cap as a benchmark to calculate the total debt. So for example, even the average market cap of this company, let us take for ease of understanding, is 30 million. So what we have to calculate is that the total debt, which is 10 million, divided by the average market cap, which we have taken as 30 million, okay, should be less than 33%. So in this case, for example, this is 1/3, which is 33%, so what we understand here by this example is that this company, because it is passing this test, meaning to say that the total debt of this company divided by the average market cap of this company is less than 33%, and hence it is allowed for the Islamic fund to invest in such a company. But in case if this same company has taken a 20 million loan, okay, and the average market cap of this company is 30 million, then it would not be allowed for the Islamic fund to invest in such a company. Now you may ask that what is the reason that we have used 1/3 as a benchmark? That's the first question. The second question you may ask is that why are we considering, the first question you may ask is that why 1/3 is used as a benchmark. So the rationale to use 1/3 as a benchmark is that the Sharia scholars, and even in the jurisprudence of Sharia, anything which is beyond 1/3 is considered as majority. Meaning to say, so for example, this is the balance sheet of the company, and For example, this is debt of the company. Okay, this is debt. Now, the remaining portion, okay, which is more than 1/3, and for example, this is 1/3. Now, this portion, either in one case, if we are using the total assets, or in the other case, because some screening parameters also use average market cap. In both the cases, okay, the major portion has to be the total assets or the average market cap. The moment this debt increases, okay, so for example, the moment this debt goes beyond 1/3, then what they say is that the total structure is in a way becoming a debt structure, and the total company is becoming a debt company, and the share of this company, okay, so for example, this is the share of the company, I mean to say the share certificate of this company is representing a debt, okay, and not actual total assets of the company or the average market cap of the company. So now this debt certificate, if it becomes, and if we are trading in a debt certificate, then this debt certificate can only be traded on par. But we have seen that in equity markets, shares are not traded on par, but they are traded either on premium or on discount. And this is the majority case. And hence, whenever a debt is traded either on a premium or a discount, whatever income is generated from that transaction, that income is considered as an income of interest. And hence, it is not allowed to trade in a certificate which is backed by debt. Therefore, it is not allowed for an Islamic fund to invest in a company whose certificate in a way reflects a majority of debt. It is only allowed when the debt portion is less than 1/3 of the total portion of the company, meaning to say that the debt portion should be less than 1/3 in relation to either the total assets of the company or the average market cap of the company. So just to recap, as I said, the second important financial screening parameter is in relation to the total debt of the company. We understand that in today's world, many companies do involve in taking debt from the market, and this is mostly conventional debt. And when they take this debt, they invariably pay an interest over the debt. But for an Islamic fund, the question is it allowed to invest in such a company? Now, the answer to that question, it is allowed to invest in company provided that the total debt divided by the average market cap of the company is less than 33%, or the total debt of the company divided by the total assets of the company is less than 33%. But if it is not less than 33%, and if it is more than 33%, then it is not allowed for an Islamic fund to invest in such a company, because by doing such an investment, it will be investing in a debt instrument, and this debt instrument, because it is actively traded in the market, then in a way, what an Islamic fund will be doing is that earning either premium or discount on this certificate, and which is not allowed.